I think the play here, if you're long, is to exit. And with new money, I would be short.
Tesla now has a 65% buy rating among analysts, which is the highest buy ratio of any S&P 500 stock that we've seen in 8 years.
And I think Ford is doing what any smart competitor would do. Step on the neck of the competitor that's feeling weak.
In this video, Ford announces plans to accelerate the rate at which they dig their own grave by slashing prices on their already unprofitable Mustang Mach E. I'm sure that will end well. And a stocks astrologer strongly advises investors who currently own Tesla stock to sell it now and then to short Tesla stock, because the chart says Tesla stock will go lower because technical analysis makes sense. And shorting a stock near 2-year lows with an absurdly cheap valuation while the company's growing revenues in the deca-billion-dollar range at about 50% per annum and has a dominant lead is definitely a smart idea, and absolutely nothing could possibly go wrong. And I'm sure Mark Spiegel would agree. If you didn't catch yesterday's video, I highly recommend it. Speaking of videos, I dropped 2 exclusive Patreon videos today. Plenty more to come. If you're not on Patreon, you're definitely missing out. Even a handful of my haters are currently Patreon members. They just can't get enough of me. I'm sure that speaks volumes in and of itself. If you're not a member, you can join Patreon with the card in the corner or the link in the pinned comment. Now over to the Ask Blaster, or what's it guys, you know, the stocks astrologer. I think Ask Blaster is the description of what happens to your butthole when you follow his advice. So it's something, I don't know, maybe I misheard. I can't remember what his nickname is. Anyway, over to you, stocks astrologer.
Let's bring in Carter. He is the CEO of Worth Charting. So absolutely, this caught our attention, Carter. And why do, I mean, there's a difference between, you know, hey, it's going to stop going up and hey, it could fall precipitously. What do you glean?
Well, I mean, so to be fair, right, this is almost turned into just a gambling chip. Before we even talk about the charts, what we know is, of course, you're talking about a stock that now is trading 3 million contracts a day in the options daily. That's almost 7% of all options traded, according to CBOE data. And we also know that if you think about the volume, 100, 200 million shares on Friday, 10% of the entire shares outstanding turned over. And over the past 6 months, the shares outstanding, some 3.2 billion, turned over 3 times. It's just a wild ride. And so I think it's the kind of thing where one has to have, or try to have, dexterity, and hence these judgments to buy it or sell it accordingly. And look, the first timing, well, it was nice to be short. It wasn't great getting long at 138. It went down as low as 102. Now, yes, it did hit 177. That's where we've flipped it around again. But it just feels a little bit crowded, steep, too far, too fast, news-related, if you will, the strength of the past 3, 4, 5 days. Sure.
And so now we have people looking at whether they should take the other side of this, worried they're going to experience what you just talked about, which is that the stock goes up another 30%. Right. It's ever thus, right? So you've got people, think about it, you've got people who've got a happy experience, 3 or 4 good trades, people who've ruined themselves, got it wrong each time. And it's why this is so treacherous. But it has literally become the most active option and the most sort of widely followed. To think that the options activity now exceeds that of the Qs, which of course is always sort of top spot. Anyway, to my eye, it's a rally to a difficult level. And I think the player, if you're long, is to exit. And with new money, I would be short.
Yes, you did hear correctly, ladies and gentlemen. The director of, what's his company called, Worthless Charting or whatever, is advising investors who currently are long Tesla stock to sell it near 2-year lows. The company's growing revenues around 50% annually in the deca-billion-dollar range, has an unassailable lead, is forcing the rest of the automotive industry to slash prices on already unprofitable electric vehicles just in an attempt to keep up. And our stocks astrologer friend here is advising investors sell. I mean, you just can't make this shit up. In addition, not only that, but he's also advising new money to go short Tesla stock at these levels. I'm sure Mark Spiegel would be very supportive of this suggestion, and I'm sure just about everyone following this is probably going to have third-degree burns to their rectum. I could be wrong, but this is not the bet I would be making. In fact, I'm making the opposite bet, still buying with every spare cent, and I fully intend on clipping this video in a few years' time to mock, ridicule, and laugh this clown off the interwebs.
Yeah, and I'm just looking at this as a very high beta name. I kind of take that, I would maybe take that a step further and ask you about the broader market. You know, we talked about, are we going to kind of head over a cliff come January? Is it because we're talking so much about a Fed cut that the markets have suddenly reversed course and started to take off again?
What's remarkable is, so where we're trading right now is where we're trading at the end of November, which is to say we've effectively repaired all of the December loss. And so the question is, we're kind of unch now, and that's giving fuel or confidence to both the bulls and the bears. And in many ways, is it this week's data, the earnings out of Apple and Google and Amazon that will inform the market, or the Fed, or other data? But we're at a critical juncture. My bias remains that we are headed lower, not higher.
That's what I was going to ask. There's two camps. There's the camp that says, I love the rallies because I'm looking to get out, and I want to sell these, these opportunities basically the market is presenting. And then there are those who think, no, we've already priced the worst of this in. We just heard Margie Patel and others who think we can either avoid recession or it'll just be mild or we might have a soft landing. And so in this case, they think it's sort of, clear sailing from here. What are your thoughts?
Yeah, clear sailing seems tough. I think it's probably tough sailing. Or said differently, even if and as the market goes higher, it won't be easy, right? It will be belabored and heavy, struggling. It's not the kind of situation, by my work, where even if we are headed higher, it's going to be something aggressive. It would likely be fairly muted. And again, my thinking is that we've already moved quite a bit to the point where sellers are once again likely to return to the market.
Now, like I said, anything could happen, and certainly it's possible that stocks universally will get absolutely crushed as we head into a recession. However, it's not the bet I would be making. It's absolutely fucking insane to me that this guy would be suggesting that investors short Tesla stock, which has potentially unlimited losses near 2-year lows with everything going for this company. Absolutely embarrassing the competition. When has it ever been a good idea to bet against Tesla? I wish this guy all the best. I hope he's right and I'm wrong, because I'd like to keep buying as cheap as I can. But in terms of probabilities, I'll tell you what, I really do think this guy is playing with fire. You'll notice he didn't discuss anything at all to do with Tesla or electric vehicles, their technology, their margins, their scale, nothing. This was all macro related. I personally believe that's a mistake. Don't get me wrong, the macro can affect everything. But if you're focused on investing decisions and deciding to short a company because you think the shit's hitting the fan in the macroeconomic environment, while completely disregarding the execution of the actual company, that is a recipe for financial ruin.
We've been looking at Tesla, which has recovered off lows this year, down around 100, back to about 180 as we begin the week. I'm also keeping a close eye on this story this morning. Looks like Berenberg upgraded Tesla to buy from hold with a price target of 200. That's down from 2.25.
Right, Ben, we're seeing some positive news, at least from Berenberg this morning, sending Tesla shares higher in the pre-market session after they closed out the week up 33% last week, so now well off of those lows. Still about 54% off their highs, though I want to point out it's not like Tesla is all in the clear, but this analyst does see some potential buying opportunities given their current levels. Like you said, upgrading the shares to buy from hold, reducing their price target to 200, still implying a good deal of upside. But the analysts noted that Tesla's price cuts represent an investment in growth, which reflects its cost leadership strategy. The firm does believe Tesla's new plans offer multi-year opportunities in capital and labor efficiencies, and they do think that ramping up its battery cell production does offer further economics of their scale. They expect Tesla to retain their gross and EBIT margin lead over legacy car makers and believes that these pricing concerns are misguided and shares have now fallen enough to present this key buying opportunity. On the other hand, Berenberg did back away from their bullish call on GM ahead of its fourth quarter numbers due tomorrow. So perhaps piling into more of the EV, more of the innovative space, away from some of these legacy autos, Ben. But I also want to point out, Tesla now has a 65% buy rating among analysts, which is the highest buy ratio of any S&P 500 stock that we've seen in 8 years.
Now that speaks volumes. When the collective wisdom, the consensus opinion of the Wall Street dingbats, who over the last decade have massively underestimated Tesla every step of the way and been completely wrong, advising investors hold, not buy, advising investors sell, not buy. When the vast majority of Wall Street analysts now, in fact, more analysts are recommending investors buy Tesla stock than any other stock on the S&P 500, the same analysts who still don't understand the opportunity, massively underestimate the company, which is where we find ourselves today. It's really worth considering. Even those who hated Tesla in the past are now recommending investors buy the stock, and they still don't even see a fraction of Tesla's future potential. Make of that what you will. Now over to Ford, who have tacitly admitted their plans to accelerate their inevitable demise by slashing prices on their already unprofitable Mustang Mach E. Now, this should go without saying, but I'm going to say it anyway, just in case anyone's not quite following along. If you're a company and you're selling a product, in the case of Ford, their flagship electric SUV, the Mustang Mach E, and it costs you more to make that product than you're actually currently selling it to consumers for, which is the current state of affairs, meaning you're not making any money. In fact, you're already losing some money on every one of these things sold. And then you slash the prices on these products. Since you're already losing money on each product sold, not making any, it doesn't mean you make less money. It means you lose more money. I know this is a crazy idea, but I don't think that is a sustainable strategy, because the more vehicles you sell, the more money you lose. Now, of course, the skeptics would argue, well, Stephen, don't you understand that if they scale up production, then they'll finally be able to make a profit on those vehicles? And yes, I do understand that. In theory, that is true, but there's just one slight problem. The problem is that Ford is currently producing a fraction of the vehicles they need to be to reach profitability on their Mustang Mach E range. A fraction. Worse still, the long-term goals, if they can get there, are still years away from reaching profitable scale. Now, to be fair, the most highly optioned high-end trims of the Mustang Mach E are certainly making some profit. But these are not the vehicles that the average consumer can afford to buy. What matters is being able to mass produce entry-level electric vehicles that are compelling, and to do so profitably, because they're the ones that are going to sell the volume. But as we know, Tesla continues to scale up production. They are not standing still. As we've just seen, Ford slashing prices in response to Tesla's recent price cuts. Tesla will scale up production further, and spoiler alert, they're going to cut prices again and again and again and again. And then what does Ford do? They either keep cutting prices, even though they haven't ramped production up to be profitable on those vehicles, or they stop cutting prices and they stop selling vehicles. I don't think it ends well for Ford, but hey, that's just my opinion. And by the way, just to be clear, Ford actually doesn't have a choice here. They must cut the prices, so Tesla really has forced their hand. There's no right decision here, it's just pick the least wrong one. And the least wrong decision is to keep cutting prices and losing more money while Tesla continues to cut prices further. I feel bad. This is the play, this is the decision, but I don't think it's going to end well.
Ford is cutting the price of its Mustang Mach E by as much as $5,900. The move follows Tesla's recent price cuts as well. Our next guest covers Tesla, Ford, and GM, and thinks GM and Ford are the place to be.
Well, this is going to be good. Make sure you got some popcorn, ladies and gentlemen. I can't wait to watch this guy self-immolate.
He's David Traynor, the founder and CEO of New Constructs, and he joins us now. David, great to speak with you on this today. I'm curious how surprising you think this price war is that seems to be emerging here, because from my perspective, I mean, this still seems like it's a growing industry. There's a lot of market share still to go around, and the demand is out there. Why cut prices?
I think Tesla's got to cut prices because demand is waning and tons of competition is coming in, and they got to move product. They've invested billions in these new facilities, and they're not really fully operational yet. And they're, so before they are even able to meet their existing operational capacity, they're seeing a decline in demand. They got to clear the pipeline. And I think Ford is doing what any smart competitor would do: step on the neck of the competitor that's feeling weak.
He didn't just say that. Did he just suggest that it is Ford stepping on Tesla's throat? Ford, the company who's losing money on the average Mach E being sold today before the price cuts, slashing prices and losing even more money despite selling a fraction of the Mach E's that Tesla is Model Y. Did he just suggest that it is Ford stepping on Tesla's throat? We now have to ask the question, why would you say something so absurd? This is nonsensical. It runs counter to reality, and I just can't imagine this guy truly believes what he has said. To illustrate how absurd this is, an analogy. Just imagine that your girlfriend contacts you on FaceTime, removes the dick from her mouth, says, "Oh, hi, honey, I miss you so much, I love you." And you say, hey, babe, how come there's a crowd of men? No one's wearing clothes, and it almost looks like you guys are about to reconstruct the Eiffel Tower and or a train. And she says, "Oh, yeah, I'm just fucking all these guys. I just, but I love you. I would never cheat on you. This isn't cheating. I'm just exploring my femininity. I will never leave you, baby, I love you. I'm very loyal." And you say, "Yeah, I believe you. Yeah, it's right. You're fucking those guys just to prove how loyal you are and how you would never cheat on me." That is the absurdity of what we've just heard from this moron. It just doesn't make sense. And it's self-evident that it doesn't make sense.
Especially the way Tesla took market share, the way they've marketed, the way they've kind of positioned other legacy automakers. I mean, I think Ford's just punching back. Ford's got the capabilities to build the scale to handle this to a price cut that Tesla doesn't have.
Nothing personal here, but I do need to call a spade a spade. This guy is either an incredibly dumb motherfucker, as in an Olympic gold medal level moron, or he knows what he's saying is a load of horseshit, yet he still says, in which case we would have to ask the question, why? He just suggested that Ford has scale that Tesla does not. Now, David, it took Ford around 2 years to ramp the Mach E up to about 60,000 units of annual production. In the same time frame, Tesla ramped to about 700,000 units of Model Y production, more than 10 times as many vehicles produced and ramped up in the same amount of time. Now, surely David isn't dumb enough to be suggesting that Ford's ICE vehicle scale is relevant to this discussion, because it's not. He's talking theoretically. Well, theoretically, Ford could magically suddenly convert all of their scale that's now producing ICE vehicles instantaneously to electric vehicles, and then suddenly they'd be actually making money on their electric vehicles. Of course, then that beggars the question, why wouldn't they have just done that already if that was the case? And the reason is because that's not possible. They need to ramp up their EV production to scale, and it's not there yet. Again, I find myself wondering out loud, is this guy an actual fucking moron, or does he have a financial or other incentive to be saying such absurd things? This guy may have been the first guy to sign up for the Mark Spiegel School of Capital Destruction online course. Check the link in Mark's social media to sign up yourself and learn how to vaporize your own money.
And this is how one competitor treats another in what is a competitive market, the auto industry. You cut prices, I'm going to cut prices. I can make money at a lower price than you can, and that's how I beat you out long term.
So I just trying to think through this. I'm trying to be fair here. Okay, so as far as I'm aware, Tesla's producing approximately 20 times as many electric vehicles as Ford is currently. So it's Tesla that has the scale. It's Tesla who's producing the electric vehicles cheaper than Ford, significantly cheaper, so much cheaper in fact that they still have industry-leading profit margins, and they continue to scale up significantly beyond their current production. After all, the only vehicle being produced in Austin and Berlin at this point in time is the Model Y. Both of those are going to scale up to like 500,000 Model Ys per year each in the next couple of years. Tesla has the scale, about 20 times as much scale, and it's Tesla that's already making the product much cheaper than Ford is. And yet, in the world of David Dipshit Trainer here, apparently that means Ford's in the strongest position because they've got the scale that they don't have, and they're the ones profitably making EVs that they're actually not making profitably. Makes total fucking sense. Is this guy the actual dumbest motherfucker to ever discuss Tesla? I think what I'm trying to say, David, is if you're going to be bearish on Tesla, I recommend getting some new material that at least kind of almost makes some logical sense instead of being the polar opposite of logical. It just might be a little bit easier to sell to one end of the bell curve. Because at this point in time, these arguments, I think even a fucking potato would retort and go, bro, that doesn't make sense. I'm a fucking potato, and I know that's dumb.
Now, they both also recently raised prices prior to this. It's been a higher cost of everything recently that ended up getting passed on to consumers as well. Is some of this just a reversal then of those, higher costs that maybe have come down a little bit since then as well?
It's possible. I mean, look, there's a lot of things that go into pricing. But I think the big issue here is how the narrative around Tesla is changing, right? For so long, the narrative was, oh, it's a superior car. They can charge more for it. People are going to be paying $70,000. The addressable market for Tesla is huge because people are going to pay up for this better car. And I think the fact is now that we know with this price cut, that's not happening. On the other hand, the legacy automakers are catching up. They're seeing a lot of sales, a lot of demand for their lower priced and comparable cars. And so I think that's the big takeaway from the price change for us.
Well, for Ford, though, I mean, they've described the Mustang, the electric Mustang, as being unprofitable.
Well, that's awkward, isn't it? I bet David wasn't expecting when he stuck his empty head on the finance media, he'd actually have somebody who knew what the fuck she was talking about push back over David. Ford's told the world that they're actually not making any money on these Mach Es. What you just said makes no fucking sense, you moron. Please explain.
To cut prices on something that's already unprofitable, they do say that they're going to increase production, and that should help. But what do you make of that, to cut prices on a vehicle that's unprofitable?
I mean, Tesla sold cars at zero profits and burned billions of dollars of cash for many years. Right? Ford can do that and as it dips its toe in the market. In fact, I think Ford and GM and all the legacy automakers are much better positioned to be successful in the EV market because they're going to be able to enter the market with way more scale than Tesla was able to enter the market. All
right, YouTube, I need to apologize. I was obviously a little bit harsh. I didn't realize, but David Trainer is actually suffering from brain damage. So it's not his fault. Something's broken. Makes sense. Ford and GM can magically press a button and instantaneously go from making no EVs or 10,000 EVs or 20,000 EVs to millions of EVs instantly. Because that's how it works. We just heard they can enter the market at scale. Like just press a button and bang, everything's now an EV. That's exactly how it works. Fucking idiot. I mean, not an idiot. Just suffering from brain damage, cognitive decline, and is unaware of it. Reminds me of a president.
And therefore achieve profitability on cars sooner.
David. My intellectually incapacitated friend. Tesla's already achieved profitability. You just said that Ford and GM can achieve profitability sooner. Tesla's already making EVs profitably, industry-leading profit margins, in fact. Maybe the brain injury has caused David to forget that time, at least on this scale, don't go there, physics nerds, I know you can, don't do that. Generally speaking, time moves in a linear fashion. If that's true, and it is, Tesla's already achieved the profitability that David is claiming GM and Ford will achieve before Tesla. I don't want to kick a guy when he's down, but I am going to call a spade a spade. This guy's either a fucking moron, or maybe he has a financial incentive for saying such absurdities. Let me know what you guys think in the comments below. Dipshit? Or is there a financial incentive, or maybe another incentive as to why he would be saying what he's saying?
So, sure, in the early days, they're going to lose some money because they're still scaling up. But Ford and GM and Volkswagen and others, they know how to scale because they've done it before. And when they do, they'll be more profitable. So,
boy, changed his tune quick, didn't he? Moments ago, we heard that GM and Ford would be quicker to get to profitability. And now we're hearing that they're not yet profitable, but they'll get there. They will. Just you wait and see. Just you wait.
I don't think it's a big deal. I mean, I know they're profitable on the F-150 Lightning, right? I mean, they're profitable on that from the get-go. So, it's look, it's a competitive market. People are going to lose a little bit of money on the front end trying to take market share. The key is that Ford and GM can afford to do that more than Tesla.
Hold up a minute. Now, putting aside the fact that ICE vehicle sales are collapsing, and that's where legacy automotive manufacturers make essentially all their profits today, and the things that make their profits are going away, and it's not going to end well, but pretend that wasn't going to happen. It is, but let's just ignore that. You may not be aware, but I am. In 2023, Tesla's going to make more money than Ford. I'm not just talking electric vehicles. I'm talking about the entire fucking companies. Tesla is going to make more money, more profit than Ford for the full year. And as we mentioned, Tesla's the company making EVs profitably at scale already. Ford is not. Again, just thinking through this logically, how would it make any sense that Ford and or GM, who's in a similar boat to Ford, can afford to lose money on every vehicle sold more so than Tesla, who is actually making industry-leading profit margins on their vehicles after the recent price cuts, who in fact can afford to continually slash the price of their vehicles and still make more money than any other automotive manufacturer on earth? I'd love to know, David, how you drew that conclusion.
How long of a timeline do you think investors should expect when it comes to, the likes of Ford in terms of really ramping up the electric side of things and getting to a place that is profitable?
I mean, I think you got to give them a year or two. I mean, they're rebuilding a bunch of facilities. I know in our part of the country down here in Tennessee, Chattanooga area, northern Georgia, they're building out huge new electric vehicle facilities. They're really leaning into it. And they're going to, again, be able to do so at a time when the EV market is mature enough to be able to digest the scale, the volume of cars that they need to produce in order to have the scales that give them efficiencies. Again, that's years of time when Tesla had to lose a lot of money creating the market that the legacy guys don't have to lose. But yeah, you got to give them a couple years as the market matures. I mean, I think we're looking at 2030 when the electric vehicle car market should be around 20 to 22, 23 million cars, and God,
this is really difficult to watch. So according to David here, my most generous interpretation of his comments is that in 2030, end of this decade, no more than maybe 1/3 of the global vehicle market will be electric vehicles, and 2/3 then I guess would be still internal combustion engine vehicles. I think David Traynor is giving Gordon Johnson quite the run for his money in terms of the number of absurdities uttered per minute.
That's a kind of market where you can have multiple players building enough cars at scale to be profitable.
How do you see things evolving for these legacy automakers like Ford with the electric vehicles and then, their more traditional vehicles, gas-powered vehicles? Would you see a case where perhaps that get split up? They become, they have their own electric vehicle company versus, their other vehicles?
It's possible. I think in the meantime, there are plenty of advantages with the experience and expertise that Ford, GM, and other legacy automakers have in terms of scaling and production and marketing and distribution that they've been doing for decades at a very profitable pace. I think that they would, the legacy portion of those businesses would maybe be happy to spin the EV portion off because the legacy portions of these businesses generate a ton of cash flow, which is being invested in the electric vehicle portion and to subsidize those losses. But therein lies another advantage for the legacy firms. They've got existing businesses that generate huge amounts of cash flow that can subsidize the growth in and investment in the EV markets.
Should we tell him? Should we tell him about the whole thing that he thinks is going to be allowing them to sustain losses on EVs, the ICE vehicles? Sales are collapsing. They're going to. Should we tell him they're going away? Nah, let him live in his fantasy.
And the transition, yeah.
Correct, the transition. On the other hand, Tesla's burning shareholder capital to do that, not existing business revenue or capital. So it's a benefit for the incumbents.
Well, that takes the fucking cake. David here claims that Tesla is burning shareholder capital rather than generating profits from their business and funding their own growth. This is 2023, David. Tesla hasn't needed to raise money for a long time. They are, in fact, generating multiple billions of dollars of profits every single quarter, and they are investing a portion of those products in their own expansion. They are actually a self-funding company. Surely David would know this. It's 2023, right? This is not 2017, 18, 19. It's 2023. Tesla generated nearly $4 billion in profits last quarter. You see, the intensity of my reaction to horse shit is in direct proportion to the amount of horse shit. And boy, oh boy, this takes the fucking cake. This idiot, or to teach you an Australian expression, dumb just falsely claimed that Tesla is vaporizing shareholder capital. In other words, they're diluting shareholders by raising capital from the markets to fund their expansion because they can't generate profits to fund their growth, which is just blatantly false. It's one thing to be wrong. It's another thing to be an absolute fucking moron, but it's something entirely different to make blatantly false claims that run absolutely counter to reality and think you're going to get away with it. You're not getting away with it, mate. You're being called out in front of 50, 60, 70 plus thousand people. This guy's a fucking disgrace and should never be allowed to open his fucking mouth anywhere in the mainstream finance media again. What he just said is absolutely false, unequivocally false, unquestionably false. This guy's misleading investors. This is why I take issue. I don't care if you're wrong, but if you're saying stuff that's untrue, and people go, oh, this guy has a logo in the background, he must be legitimate, I'm going to believe him. People might lose money, assuming what he said is true. Does anyone have any inside information? Does this guy does he own Ford and GM stock and he's not allowed to sell it for a few years, so he has to keep hype? What's the deal? Who's paying him? What's the financial incentive? Surely he doesn't have a humiliation fetish, so there's got to be a reason why he says what he says. He can't possibly believe that what he said was true, because if that were the case, he wouldn't have looked at any Tesla earnings for the last 4+ years. So why did he say that? In fact, why was everything that came out of this guy's mouth total horseshit? Is he like a comedian or something? Not very funny if he is. I'm serious. Does anyone know why this guy's saying this stuff? Send me a DM on Twitter. I'd love to know. I can't accept that he's just that dumb. There's no way. No one on earth could be that dumb. Like I said, a fucking potato would realize this is bullshit. What's going on? Well, in the interest of balance, at least I hope, I haven't actually watched this clip yet, we're now going to head over to the sometimes aptly named Yahoo Finance to see their interpretations of Ford's price cuts. Hopefully they and all their guests make just a little bit more sense than David dipshit Trainer did.
Ford following in Tesla's tire tracks, if you will, this week, cutting prices of its electric crossover Mustang Mach E by as much as $5,900 per vehicle. Senior Autos reporter Praz Romanian here with more on the price drop. Praz, it seems like nobody had a choice in the matter after Elon made that move.
I mean, this is all in response to Tesla, right? They dropped the gauntlet,
Yes, I think
some sort of a gauntlet was dropped, right? So yeah, I mean,
I don't think you drop a gauntlet actually, but proceed. I think you run the gauntlet.
Run the gauntlet.
It's throw down the gauntlet, guys.
You're drop a hammer.
Drop the hammer, yes, the axe. Cut those prices.
We are off the tracks. Get back on them.
I'll try. So by as little as $600 to, like you said, almost $6,000 across the range of Mustang Mach E's there, trying to compete with Tesla. Also, one of the most popular models there, the E-Performance all-wheel drive, I think, of the Mach E, below that $55,000 price cap, very important for those EV tax credits. So big deal for Ford. Ford said, quote, "We're not going to cede ground to anyone." So some strong words there. That's basically alluding to Tesla. They also said they're going to increase production. They didn't say by how much they're going to do this year, but they sold around 40,000 Mustang Mach E's in 2022. So I imagine you'll see a decent lift from that.
Yeah, certainly a number of these automakers feeling the pressure here following these price cuts. Plus, it's interesting when you take a look at Wall Street's reaction, because at first there was so much worry about what this was going to do with margins. Now it seems like that sentiment has shifted a little bit. More and more are getting optimistic. There was a new upgrade today on the stock, a little bit more positive outlook here going forward for Tesla. Yeah,
Berenberg upgraded Tesla from hold to buy here, talking about how the concerns over price cuts were misguided. They talk about how, in the short term, yes, it might affect margins, but in the long term, as factories like Austin, Berlin, and also Shanghai, also they build more. They can build at a cheaper level, and that's going to offset some of those price cut concerns, margin concerns. So the analysts are upgraded stock. They also downgraded GM and also BMW here, talking about weaker demand, supply chain, and also price mix concerns. Although they said that luxury cars can kind of weather a bit more high, charge a bit more for luxury cars, that won't actually affect the sales too much.
Just be curious. So Ford doesn't have the margins that Tesla does. So when they make that $5,900 price cut, that's far more significant for them than it may be Tesla.
Now, don't tell David shit trainer this, but that's actually true. That does actually make sense, and that does in fact align with reality rather than run directly counter to it. Impressively, Yahoo Finance seeming to interpret these price cuts a little bit more accurately with a little higher dose of reality than David Trainer. But in the interest of balance, last but certainly not least, a very short clip from Doomberg to see how they interpret these price cuts. It's always good to hear different opinions and to think about whether or not they make sense, whether or not there's a financial incentive and/or an humiliation fetish being acted out. So, over to Doomberg.
I'm looking at Ford, stock down 1.6%. Your take on the price cuts?
Yeah, it's interesting. I mean, our colleague Dana Hall wrote the other day, right, is this the start of the first EV price war with Tesla going first? I think there's mixed opinion on this, right? We write that this is Ford responding directly to Tesla, from a demand perspective. But if you look at where they cut price, Rizka was talking about an average $4,500 cut. That actually on the base model, it's a $900 cut. On the most expensive GT model, it's a $5,900 cut. Why is that important? Because it brings those more expensive models in line with eligibility for the IRA 7,500 tax incentive, right? So it's both sides, response to Tesla, but I also think Ford says we need to make these vehicles eligible for that broader federal discount.
Yeah, good news for EV buyers out there, particularly stateside. What does it mean for margins, though, Ed? They're presumably comfortable with thinner margins to get that market share.
Yeah, I remember being in Los Angeles 2019 with Jim Hackett, the former CEO, when the Mach E was unveiled, and he said on camera, you can go back and look at it, this will be profitable from car or unit number one. Of course, it wasn't.
See, more proof that Elon Musk is a fraud and a liar, because he said they'd be profitable from day one and they weren't. He was talking about Tesla, wasn't he? Not Ford. Oh no, that was Ford. That's awkward.
And part of that has been low volumes, right? 2023 is really the year that the Mach E is going to ramp up its production to the tune of many more tens of thousands of units. That should aid that profitability profile. But again, this is a company transitioning from combustion engine to EV, not a pure play name, and they're still working out the economics.
I love that you brought up the Inflation Reduction Act, because it's like maybe it actually is an Inflation Reduction Act because like they have to lower their prices to qualify. If they have to do it, and that's more of the reason, are there other auto companies, EV companies that have to do it at the same time?
Well, that's what I mean about referencing Dana Hall's price war column, because, the next domino to fall, so to speak, I assume is General Motors. What are they going to do in response to their crosstown neighbor Ford and Tesla? But maybe they don't. I think.
Oh, no, Ed, they definitely won't, because as we know, GM led. And it matters. So they're the ones who will be leading with the price cuts, not following with the price cut. Just like they led the industry with their amazing Ultium battery pouch cell technology that they've just announced they're no longer going to be pursuing, because instead they're going to be copying Tesla's 4680 cell form factor. More proof that they led, and it matters. So please, definitely don't expect GM to follow Ford, who are following Tesla with price cuts to be announced in the near future, because that would suggest that maybe they're following, not leading, and that's definitely not true, because the corrupt president of the United States told me that they led and it mattered, so therefore it must be true, right?
The issue is still one of demand, right? And Ford and General Motors are supply constrained. In other words, they're building so few units that the demand for their specific products outweighs their ability to supply right now. For Tesla, that wasn't necessarily the case.
It was the case, Ed. I know some people don't get this. I've covered it a million times. There were no issues around demand. There won't be any issues around demand all fucking decade. Even shitty EVs will sell. Make them, they'll buy them. People don't get this. I covered it before. Remember, new incentives phasing in and out. Consumers will bring forward or push back purchases. That doesn't mean there's no demand. That means that consumers aren't morons. So let's recap. 1. A stocks astrologer who's very credible and obviously knows what he's talking about says, 1. If you own Tesla stock, sell it now. And 2. If you don't own Tesla stock, you should initiate a short position, because the chart told me it's going lower, and the chart's never wrong, except when it is. David Trainer, after viewing a video of his hypothetical girlfriend removing a dick from her mouth, says she's not cheating on me, she's just exploring her femininity, and that's why it is Ford putting their foot on the neck of Tesla. The poor, empty shell of a man also seems to be under the impression that time runs in reverse, and therefore Ford and GM are going to beat Tesla to profitable EV scale, because that's how time works. It goes in the opposite direction. The folks on Yahoo Finance interpret Ford price cuts rather differently to David Dipshit Trainer, and in fact suggest that maybe Ford are needing to cut prices because Tesla has forced their hand. It's probably not good. And then of course we have Bloomberg chiming in, understanding that Ford is cutting prices from a position of weakness, not strength, but also still a little bit confused as to whether or not there actually is demand for Tesla vehicles and electric vehicles in general. And we heard a rather miraculous fact. There are more Wall Street stock analysts today, about 65%, recommending investors buy Tesla stock than any other S&P 500 stock. Let that sink in. And after so much criticism and some harsh negative words, after people said some silly things, I'd definitely like to end today's video on a very positive note. So let me think here. Well, hey, I mean, no matter how bad your life, at least you're not David Trainer. And if you'd like more content, including the 2 exclusive videos I dropped today, head over to Patreon with the card in the corner or the link at the pinned comment. Today's exclusive videos include some extremely embarrassing admissions from General Motors, some extremely embarrassing examples of the hive mind, and a few rather unfiltered thoughts from some obnoxious dickhead on the internet. So, see you over on Patreon. Love ya.